Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, January the 9th. Well, the pullback continues, and we were down about 55 in the Dow, S&P down 4, NASDAQ down 7. Very orderly pullback. The market is pulling back, but what's telling me that the market is still in bullish mode. No fear at all whatsoever in the markets, and that's something that we really need to consider. It was very, very quiet yesterday. A couple of small little trades that could have been, but you know what? When you get into this time where now we're getting into earnings season, which the earnings season is going to really, really start picking up, it's always nice to keep your palate dry, especially right now. And I'm very surprised that the pullback is so quiet and so orderly. But again, guys, that is a bullish sign. And we mentioned the overall structure yesterday that we do have longer term, that we have a long-term bullish structure in the markets. So not much to really discuss today, but I definitely want to just run over some of these, run over some of the indicators, and then we'll go through the charts. As you can see here, our NYMO, we really didn't do much here. We actually rolled back down again, but we're still not even in overbought territory, really slightly overbought, but we could continue to run higher, or we could actually sell off into real negative, into oversold territory. So this is really not telling us much of anything. But take a look at our RHCOMP, which is the NASDAQ record high percentage index. We are here at lofty levels. We're still in this area. So I would like to, like I mentioned yesterday, I would love to see this market correct itself a little bit more and at least fill this gap into this support zone here, and then we will look to buy the market. Take a look at our SPX ATR, and as you can see here, we had a nice little move down. ATR goes down, market goes up, and that's what's happening right now. We're kind of just sitting right up in here, but we're coming into support in this area. So this is something that we're going to watch and keep an eye on. And these are all these little things that at the end of the day, what we do is we run through our charts and we run through our indicators and see where this market is going, so we have a better handle on what directional bias that we're looking to take for the next day. Now the U.S. dollar is really interesting. I was looking for a bigger move higher based on the hawkish minutes on the FOMC, but that really didn't occur. It did pop up for a couple of days, hit that 200-day moving average, as you can see here. Dollar's up about 20 cents right now, so catching a little bit of a bid. But the thing is that the dollar right now has this inverse correlated effect. And what's going to happen is that if you follow currencies, and even if you don't, there's really three safe haven currencies. There's the U.S. dollar, the Swiss franc, and then, of course, the Japanese yen. Don't ask me why, but that's what the market participants believe it to be. Now, Swiss franc is pegged to the euro, so that goes away. You have now the Japanese yen, new government come into play saying that, you know what, we're not a safe haven currency, and it's killing our economy by having a stronger yen. So the last several months they've been beating the yen down. So right now it's in so oversold territory. Yes, the yen will bounce correctively, but I do think that the yen overall throughout the year will be weak and probably stay weak with this new government in place. What does that leave? The U.S. dollar. The U.S. dollar is going to be king and always will be king. So what happens is that we have this inversely correlated effect. But if the economy is getting better, like the numbers are telling us, right, eventually you'll have a correlated effect with what the S&P does and the U.S. dollar. So right now the dollar goes up, commodities go down, precious metal goes down, and of course equities go down. So that's that inverse effect. But as of in the next, I would say probably few months, maybe 6 months, that might even change. Okay, and we'll see that change, that transition happen. But right now, we still have the inverse effect, so that's what we want to look for. So as you can see, the dollar here just kind of sitting in this zone. But I want to show you the weekly chart. And as you can see, remember we have this head and shoulders pattern. And again, head and shoulders, only if it breaks this neckline below on a closing basis, will trigger a short in the U.S. dollar. That would put a big bid into the equity markets and commodities. So again, something to think about. Let's move on to the VIX and the complacency of the market, which I'm very, very concerned about. I'm not position trading or swing trading right now because of what's happening and where we are at these lofty levels. Market just seems to always have a bid underneath it and will not sell off to comfortable levels where you can say, well, you know what, XYZ was trading at 50 and now it's at 35 or 40. It's a great spot to buy. That doesn't happen anymore. It's either, buy it at 50, buy it at 60. And, that's not the way I look to manage my risk that way. And as you can see here, we're at these extreme complacency levels. VIX is at extreme lows. It means that puts are very, very cheap. Buying option premiums are very inexpensive. So that's something that if you're a longer term trader, you might want to look to buy protection. And again, protection is made to be, it's like insurance. You buy it, that money's gone. But it does protect your portfolio. Some people don't like doing that, but it's just something to consider for the people that follow us here that are longer term investors as well. CBOE, same thing, guys, right up in here. We're at the 95 area, bullish mark for the equities. So again, no fear at all whatsoever. All right, let's run into the charts. Take a look at the 10-minute chart of the SPY. As you can see here, we have been in a range for the last 5 days. Big move up on the fiscal cliff resolution, at least a temporary resolution, and we've been trading sideways. Now, we had Alcoa report last night. It begins earnings season. I'm really excited about this because we're going to have a lot of gap plays. A lot of stocks to trade pretty much all day and even after hours for that matter. So keep your palates dry. If you don't see anything, cash is a position for the moment. There'll be plenty of time to make up the day that's lost. You don't want to be making up big bad days, and that's why I like to, just be nimble enough to say, okay, you know what? I'm not seeing anything. I'm having some difficulty today. Whatever. I'll wait for tomorrow. Let me get my day started for tomorrow. Do my research, and that's really a great way to manage your day. Remember, you're the person trading. You, an individual, you're running basically a business, so it needs to be run that way. And management is really key to that success. All right, so let's take a look at the S&P 500. As you can see here, big pop up, and we're just consolidating 5-day inside day, but we're at these levels here. So to me, that we're trading at the upper end of the range with no fear tells me that we want to take out these highs and we want to test the highs. Okay, Spiders SPY. I like to show it shows you the gaps. Big gap here. Love to see this come down to the 20, even down to the 50 area. That'll be a great spot to look to buy. Okay, at least to give a shot to buy. And lastly, here's Apple. And Apple here cannot get out of its way. Up and down yesterday, $4 or $5. This is basically a day trading stock for now. Again, guys, personally, my objective, and we've been pretty much dead on our analysis, I would look to buy it down here at the 500 area. Very tight stop. If she breaks 500, you're going to look to that second lower weekly trend line, which comes in at around 475. That's where I would take a bigger long shot to the downside. And I have a funny feeling we may see that. Apple comes and reports earnings this month, so it'll be interesting to see what happens. If at all they're having some issues and they're having some problems, then I think you're going to have this thing really sell off pretty hard. But let's see. We're not in the predicting game, so let's just keep an eye on what's happening. All right, guys, that's really it. Very, very quiet. I'm hoping this thing. Well, I'm not hoping that. I know it will with earnings season, and it'll be a good telltale sign about what these U.S. companies are doing, and really a good forecasting for the new year to come. Have a great day, and we'll talk to you tomorrow. Take care.